Hey everyone, thanks again so much for joining us here on the YouTube. I'm Abby Talmadge, your North Carolina real estate expert. And today I'm talking mortgages with Bryan Parker at Union Home Mortgage. He is one of my best lenders. He's got over 20 years of experience, and he puts together the best loan packages tailored to every one of my clients. So Bryan, if you want to say a quick hey.
Hey everybody, thanks for having me, Abby. Glad to be here.
Absolutely. So today in our video, guys, we're going to be covering a little bit about how to choose a mortgage lender, and then kind of dive into some COVID-specific topics because, the world has completely changed, and as well as the mortgage world. So if you're even thinking about buying a house or selling, these are important things to know. So, Bryan, if you're ready, let's go ahead and just jump in.
All set.
Awesome. So lenders, there's banks, there's private lenders, and there's Quicken Loans. Tell me a little bit more about why private lenders are the best. I mean, I agree, but let everybody else know, what are the differences between them all and why private lenders rock?
No, it's a great question. There's a lot of options out there, a lot of really good mortgage companies, whether it's a bank or an independent mortgage banking company like ours, brokers and stuff. But like any profession, whether it be mortgages, real estate, a doctor or whatnot, there's also some bad ones and stuff that works really good sometimes, and sometimes it doesn't. So I think, for a consumer, if you're looking at options in terms of a mortgage, what you should know is there's, I guess, different tiers of the type of mortgage lender you're working with. You have your broker, which is basically an entity that they're looking at other companies to do your mortgage. They might look at Union Home as an example, or Wells Fargo or Bank of America, any number of ones. And what they're going to do is they're going to go out and shop the rate. They're going to put you with the lender they think they can give you the best rate. They're going to take your loan application, but then they're going to send it to that lender to do all the other processes from there. So basically it's kind of a middleman. And while in many cases you might, as a consumer, get a good rate, stuff like that, the process is now out of that broker's control. You're kind of at the mercy of that other lender that's handling the process there. From there, your next step up the ladder would be working with a correspondent lender, which means they're lending their own money, and in most cases they're underwriting the documents in-house as well, but they're not retaining the mortgage. They've already decided where they're going to send it as well, maybe Union Home, maybe Wells Fargo, wherever it might be. But they do take care of it inside. And once you close on the loan, you start making your payments to whatever entity they agreed to deliver the loan to. Then you have your independent mortgage banking companies, Union Home Mortgage, around since 1970. We do everything internally. And then when you close your loan, you make your payments to Union Home Mortgage. So you can call the 800 number with questions if you have it on your mortgage statement about your loan, or you can call, me and my team, because you don't get rid of us after you close your loan. And then the next piece is now you're into the banks, your FDIC institutions, Wells Fargo, Bank of America, name them all. Those are kind of your different tiers. There's benefits to all. I think it just depends on a consumer and really what's important to them. Do they want to be with their bank, in doing that? Are they really looking for a rate? Are they looking for great service? What's important to them and the company they want to work with.
Exactly. That makes a lot of sense. That kind of leads into my next question. When you are picking a lender, you mentioned some of those things that are important to consumers. Just expand a little bit more on that. Like, what makes a lender right for a person?
Another great question. Human beings, we naturally want the best deal on everything, right? I want the best price on a car. I want the best, value I can on the furniture I got to buy for my home. I want the best meal at the lowest price at the restaurant I go into. And the same is about a mortgage, but a mortgage is the one thing that a consumer cannot get buyer remorse about. If you don't like the car, you can take it back and trade it in. If you don't like the shirt or the suit that you bought at the store, you can take it back and exchange it or get a refund. But when you sell them a house and I do the mortgage, they can't get buyer remorse because it's going to cost them money to get out of that remorse. So, while it is our nature to look for the best deal on everything, the home is not the best deal. The home mortgage is not the best deal. It's what's the right decision. And we're really competitive on our rates, and our fees are very competitive with all of our competition. But it's like when you're dealing with a mortgage professional, are you getting the advice that's best for you? Some people are just order takers. I don't take orders. I'm affecting people's lifestyles and their livelihood, not just now, but 5 years, 20 years from now. So I think as a consumer, while price is important, while rate's important, fees are important, really knowing the professional you're working with and they've got your best interest in mind, I think that's what a consumer should look for when they're looking for a mortgage company and a mortgage loan officer.
Absolutely. That's really good advice. I mean, it's all about at the end of the day who you can trust, who's going to get you to the closing table, and who's going to be there for you after closing. You want to refinance, or if you just need some advice on what to do for payments, it's really important. And I feel like, lenders like you are, the guys to go to for that because you will be there. So let's shift gears a little bit away from choosing a lender and talk a little bit more about COVID because we are in some crazy times right now. Yeah, so I'm wondering, how has COVID affected, qualifying requirements for loan programs, and are all those loan programs that were there before still available, like first-time homebuyer program, for example?
Yeah, that's a great question, and I'll give you some good answers. But just kind of to preface that, literally in the COVID environment right now, with every mortgage company across the country, literally almost every day, we may see a new change as related to how it might affect the borrower and qualifying and stuff like that.
Wow.
It all goes back directly to when the CARES Act was passed in the stimulus package. And while that was really beneficial for small business loans, paycheck protection, all that, there's a piece in that is very negative and very costly to all mortgage companies nationally. And when that CARES Act passed, literally within 48 hours, we saw loan programs going from being this many available to being this many available.
Wow.
And it's gotten a little better since then, but it's still not back where we were. The first-time homebuyer programs, the down payment assistance programs and stuff, for example, they're still out there, but 99% of all mortgage companies aren't doing them right now. And that's because it's directly related to the ability for the homeowner to file forbearance underneath the CARES Act. And when you file forbearance, the mortgage company's having to make those payments for the consumer. People think the mortgage company just is holding on to it, and we're not. Those payments still have to go somewhere down the line, and the mortgage company has to do that. And right now, there's still over 7% of all mortgages nationally that are still filing forbearance as related to COVID. We saw jumbo loan programs go away. They came back. Not all of them, but some of them are back. Same thing with some specialty programs, doctor loans, bridge loans, non-QM products. Some have come back, but some haven't. The other key piece is kind of documentation with a client. Like if I was helping you buy your home and I've got your pay stub and your pay stub's dated within the last 60 days, that's good enough for me to close on your loan. But now, every pay stub a customer gets between now and the time they buy their home, we've got to have the updated pay stub. Mm-hmm. If your bank statement comes out before we close, we need your updated bank statement. So it's more aggravating to the consumer right now for the documentation they got to keep providing as we go further down the track. So it's different. We're probably going to see this for a while. Just know that when a consumer is working with a loan officer, if the loan officer is communicating with them up front, then they'll know it's not a surprise to be asked for additional documents once they get into the process. That expectation should be set up front.
Absolutely. So it sounds like buyers just need to be more responsible in the bookkeeping and, really keep up with what's going on.
Right. And don't put anything in a box and put it in a moving truck. You might need to get it back out. Keep all that important stuff handy.
Absolutely. I need to do that. So my next question to you is, how has COVID changed how you do business? I mean, look at us now. We're on Zoom doing an interview when usually I do this in person.
Yeah, no, great question. It's been an adaptive process. Different. I'm old school. I still would like to meet with people face to face. I can take them through education and show them how interest rates work. What happens in the market each day that affects an interest rate. Go through different credit score tiers and stuff like that. The difference is now we're doing it, but we're doing it maybe in Zoom calls like this, mm-hmm. and doing screen shares. And quite honestly, there's a lot of benefit in doing it. The customer doesn't have to take the time to drive into the office. We can record it, and they can go back and review the same information that we've discussed and everything.
That's cool.
You can actually get multiple people into it as well. How many people have I met with since COVID started? Maybe 5. I had an older couple come in last week. They don't do anything by email, and it's all way snail pace and stuff. And I've got a workstation set up out in the other room where I'm on one side of the station, they're on the other. We've got our mask on and all of that.
Wow.
It's different, but there's a lot of benefit to it. And I think for everybody, whatever business you're in, a lot of people are working at home now, and this may be the new normal as we go forward in business, not just next year, but in the 10, 15, 20 years going forward.
Absolutely. I kind of don't hate it though. I mean, this is really convenient. I just got to take a shower and then here we are talking, like I love it.
Yeah, no, it's good. Just don't be like that news reporter from ABC or NBC that was a month or so ago, and he was doing his video from home, and then he stood up and he had shorts on.
Oh, no.
He had on nice shirt, tie, all that, but he stood up and he had his shorts on. So, yeah, make sure you're prepared for the situation you might be in and everything.
Absolutely.
But, I haven't put on a pair of slacks in 4 months now? I think. So,
yeah, it's great. This is the first time I've put on makeup in at least a month. It's really great.
and it's different. I know a lot of people treat it differently as far as how they're responding to COVID. As far as if they're how concerned they are. Personally for me, we're taking it very seriously. We've got, both my wife and I, we've got elderly parents that are in their 80s, and some have some health issues and stuff like that. So it just depends on the person and the situation. But just know that whether it's me or you as their home professionals or whatever industry it is that's out there, I think every company is doing the best they can to adapt to what we're all in right now.
Absolutely. We just got to take care of each other and be safe. What are you seeing in the market right now as far as interest rates and like inventory and whatnot?
All right. So interest rates. All right. So for any consumer out there, first thing you need to know is an interest rate is just like a stock. If you're looking at, Amazon or IBM or Netflix stock, that stock price will move up and down throughout the day. And that's the same for an interest rate. An interest rate has a buy price, and that will change throughout the day. And it's all based on how long you might need your rate lock for, whether it's 15 days or 30 or 90 days or whatever that number might look like. And the longer the rate lock, the potential higher buy price or the little bit higher in rate. Credit scores are very important in your rate. Really, a 740 credit score is going to get you the same rate as an 800 credit score. But, a 680 credit score, you're probably looking at a rate maybe 0.3% to 0.5% higher than a 740 credit score. And here's the odd piece about it as well. You would think really the smaller amount of money you borrow, the lower your interest rate might be, but it's the other way around. If you're borrowing $400,000, for example, and we'll just use a scenario, your rate might be 3%. But if you're borrowing $100,000, your rate might be 3.375. And that's not determined by us as the mortgage lender. That's as determined by Fannie Mae, Freddie Mac, or Ginnie Mae, which are the entities that really write all the rules and regulations that we follow. But to give you a couple of scenarios, I'm doing a $35,000 loan right now. The rate on that's 3.375. I quoted a customer on Friday a 30-year fixed rate loan on a 60-day rate lock. Rate was 2.625%.
Wow.
Money is dirt cheap right now.
That's crazy.
And for a potential homeowner out there, let's think about this. Inventory is really low.
Right.
It's hard to find something they might want to buy right now. And I want to buy in the 225 to 275 price point. And here in our market, you're not going to find anything unless you're willing to go in and put some work into it.
Yep.
But the best advice I can give that person and maybe help you in terms of them looking at houses is, as cheap as money is right now, you can go look in that 325 price point, because if we were back at 4% versus where we're at right now, you're talking on $100,000 at a 1% difference, not a significant difference in payment than if you were back at 225 with a 4% rate.
Yeah.
So buying right now is strong. Equity positions are growing, in our market, depending on maybe even your neighborhood, where our appreciation rate in the triangle right now is anywhere from 3 to 5% per year.
Right.
And if I reflect this back to 2007 to 2010, back in the last housing crash, the triangle market was never really in a declining market situation. Mm-hmm. So while other areas of the country saw housing values going down, we did not have that here in the triangle. Right. And right now, I mean, you can go to Forbes, you can go to Newsweek, any of the publications right there. The triangle market's one of the hottest in the country right now. And anybody looking to buy, they would be wise to buy right now, even if it's not their best situation for a home. Because if you hold on to that for 2 to 4 years, you're going to have a good equity position and turn around and be able to sell that, then maybe really go get the home you're looking for.
Absolutely. I totally agree with you. You just took the words right out of my mouth.
Yeah, buy, sell. And for sellers out there, a lot of sellers don't want to sell right now. One, because they don't think they have the equity they should, and they'd be surprised if they would just sit down with you and do a CMA, a market analysis, to find out what they could potentially sell their home for. They might be amazed to find out how much equity they have. I won't give you specifics, for two of the consumers, but we bought our home in November of 2015. We just completed our refinance, and our value has increased by $85,000 in 5 years. Whew. And so, I'm telling my wife, maybe we should sell the home. She's like, no, but, and take advantage of it. But she didn't want to do that. So sellers know you might have an equity position out there where you could go do something you want to do.
Right.
And if you have that equity position, then you can turn around and use that to maybe buy that upgrade home that you did.
Oh, no.
Just didn't know that you could find or afford. So you do have those options.
Well, Bryan, I've got one more question for you before we hang up. So like we've said before, we're in unprecedented times. We've got a pandemic going on. The unemployment rates are crazy high. We're also in an election year. So in your years of experience doing this as a lender, what do you foresee the market doing over the course of the next 4 to 6 months?
It won't do anything in terms of any kind of rate volatility because it's an election year.
Okay.
What happens post-election, don't know. We use when President Trump was elected, 4 years ago. The elections take place on Tuesday. That Wednesday, after the election took place on Tuesday, we saw interest rates rise as much as 1% and then drop all the way back down and even finish a little bit lower than they started that same day because of the way the way Wall Street reacted to Trump becoming president. Now, how does it react this year if he's reelected or if it's former Vice President Joe Biden? We don't know. But the mortgage analysts that are out there are literally saying, while we'll see some up and down in rates, we should expect rates to be around on a 30-year fixed rate loan if you got good credit, just moving up and around 3% probably through 2021.
That's good news. I'm glad to hear that. I get a lot of people asking me this question, and they're really afraid that it's going to go back to like the 80s where we're having like a 12, 14% interest rate. So I'm glad to hear that you're not thinking that's going to happen.
No, it won't. And that's a great kind of point. We'll never see rates like that again, I don't think. When we go back to the last recession we were in, or even go back all the way to the Great Depression, anytime our economy has gone into a really big downturn like that, the one thing that's always led us out of that was housing. Mm-hmm. And, we're not there yet, but, you've got Fed chairman, people on the Fed board, analysts, the U.S. economy is going to go into a recession. And when we get there, they predict when we drop in there, we're going to get there very quickly. But at the same time, by the time they think we get there, it's going to be kind of a bouncing ball effect. They think as soon as we hit that bottom, we'll start bouncing right out of it right away. So, and what's going to lead us out of that is always housing.
Well, that is awesome. Bryan, thank you so much for joining me today on this Zoom call. I think everything you said was super important and educational. People have so many questions these days, and just the best way to do it is to give it to them like this right now, because this is the only way we can do it. So.
No, absolutely. And for the listeners that are out there, hey, I work with a lot of real estate agents. And I'll just tell you, if you're taking time to listen and watch the video here with Abby, she's one of the top agents that I work with across our market. Don't call the number you see on the sign if you're driving by a house. Make sure you write Abby's number down, because if you want a true professional and knowledgeable someone in the market, she's the one you want to talk to.
Thank you so much, Bryan. I really appreciate it. So you guys, don't forget to like and subscribe. Please comment if you love the video or whatever questions you have. We're happy to be here for you. I'm also including Bryan's information right below, right here, so that you can give him a call if you're interested in getting a loan here in North Carolina. So, awesome. Well, you guys all take care, stay safe, take care of each other, and I will see you later, Bryan.
All right, you too. Have a great day, Abby.